How's it going, guys? This is Forensic Forks with Deontay, and I'm back with another video. This is episode 35 to the Asian Session Library. On Thursday, the 8th, February 2024, we had a successful Asian Session model with the pair US dollar versus Japanese yen. As always, we're going to be utilizing the New York lunch period, which is from 12 p.m. to 8 p.m. We're going to be looking for all the sell side liquidity that's available and buy side liquidity that's available going into the Asian session. So here we have 8 p.m. or 8:15 candle. That's the open here of the Asian session. We have buy side liquidity above this swing high, sell side below these swing lows here. So we're utilizing and trying to see which side the market is going to break first or purge first, because that's where retail traders are most likely going to chase. That is one scenario that we're looking for. We want them to chase price and we want to be counter to where they're chasing. So if it breaks the high, we want to go short. If it breaks a low, we want to go long. Doesn't mean it has to break every single low, but at one point, once it breaks one of the lows, we're stalking the setup. Once it breaks one of the highs, we're stalking the setup. We can see there's only one swing high we have here available. So after it breaks that, we would look to go short potentially. If it breaks this, we start stalking and we'll stalk the entire way while it's going down, even if it breaks the second one or the third one. So let's take a look at what happens. So we go forward, we see price breaks this here. So there's a purge going on. Price pulls itself below 8 p.m. opening price. So we're at a discount. We're already cheap because we're below fair value. So let's go down to the 1 minute to look for our entry technique. So what we're looking for is a fair value gap that breaks a swing high. Now there's multiple fair value gaps that form. Last night in the Telegram channel, I was showing all those fair value gaps and I was trying to lead people in the right direction. I was like, hey, that's not the entry that I look for, at least. That could be the entry that you want to take, but that's not the entry I'm looking for. We had a fair value gap here. So let's mark out all the fair value gaps that we have here. So we had one here. Let's play it forward. We had another one here. Play it forward. And we can see that these are, let me double check. High. So these are double tops here. So I wouldn't consider this here. See that? 149, 292, 149, 292. I want that swing high to be inside the bulk, not at the beginning or the end. It doesn't have to be the same price point. It needs to be inside. Once it's off 1 pip, then we're good. It can't be on the exact same line the fair value gap is starting or ending. It needs to be in between. So that's one we wouldn't consider either. Keep playing it forward. Keep playing it forward. You see we have I think that's like a very tiny fair value gap here, right? You got a small one right there, right? Another fair value gap. I'm not taking that either. That's not the one I want. Play it forward. We had another fair value gap here, right? So there's multiple fair value gaps here. Multiple to the upside, not the downside ones. And I wouldn't take another one here. Not taking this either. Not taking that one. I'm just being very specific and picky with my entry. Price finally takes off, and there we go. Fair value gap. That's the one. That's the golden ticket. This is the one right here. That one right there. Boom. Fair value gap that breaks a swing high. There's speed in one direction in these three candles. 1, 2, 3. And efficiency left while breaking a swing high here. That's where we would go long for a 1-to-1 scenario. I like the 1-to-1 scenario because it's very minimum. I don't have to do a lot of thinking. 15 pips for 15 pips. Done. That's it. Risking 1, 2, or 3%. I tell traders all the time, check your risk parameters. Do not risk too much, because not to say that this trade will be successful, because this trade could fail. We know that there are Asian session models that do fail, because if every single Asian session model for every single Asian session was working, we'll be at episode, 1,000 by now. But we're not. So play it forward. Right? No entry yet. No entry. Boom. Now we're in long. And now we hold. Right? And it's expected that there are going to be days where this entry does pull you into drawdown. We've seen that time and time again. If you've been following this session, this library, from beginning to current one right now, we had setups where we have some drawdown that gets really close, right? Maybe even 10 pips down, maybe even 11 pips down, 12 pips down, and then turns around. But we're able to hold that because we're risking properly. You can't hold the trade to stop loss, most likely because you're risking too much. And you're like, oh man, if it hits my stop, I'm really like down bad. And by the time it even gets down here, you're already down bad if you're risking 4%, 5% per trade. You're risking way too much, over leveraging. Once you're comfortable with what you're risking, you don't mind when it pulls you into drawdown because if you take the loss, it's not a problem. I'm only down 0.5%. I'm only down 1%. I'm only down 2%. I'm only down 3%. The max, I would say 3% down, you're good. You go in 4%, 5%, you're pushing it. You're starting to dig a hole for yourself. But as you can see, price comes up, gives us that 15 pips TP. At 10 pips, I would scale out, right? I would scale out. I wouldn't move the stop loss yet. I would scale out. Once I get 15 pips, I would then move the stop loss to scale below some type of swing low, a higher swing low. Because if we're expecting this to trend higher, because this is Thursday, and the data has been showing that Thursdays tend to trend on into the next day. And also notice how price gets back to the Asian session open and gives a reaction back down. Look at that. Sensitive price point. So just a little sidebar here, right? Side note. Look at that reaction. Then it goes back up. Let's play it all the way through to where we are now. It goes back down to the Asian session open, right? Respects it, trades back up. And now we're into Friday, true day, opening price, 12 a.m. Price drops below 12 a.m. opening price. Getting into London. Let's speed it up a little bit. More than 15 pips there, right? And let's play it all the way through to where we are right now. I believe it does get stopped eventually. There we go. And that's where we are right now, currently in price. So as you can see, at times you can't get more than 15 pips. You can't get more than 10 pips going into another day or even during the actual session itself. It's been a while since I've seen the actual session itself give over like 60, 80 pips within its time period here without going into the next day. And you'll notice as well, it's very difficult at times to have a trailing stop because the market's just seeking for liquidity to sponsor its buys again. So it's going to run a low. And where are we taught to place our stop loss? Below swing lows. The market eats that right up. So pay the trader. Always pay the trader. Trail the stop if you can get more. That's the cherry on top. When you're able to trail the stop, you already made everything that you wanted to make. And at this point, you're just, raking in a little more. So hopefully you found this insightful. Hey, man, episode 35. Peace.